And now I want to dive a little bit deeper into understanding the changes in monetary policy. There's 7 questions that we want to answer. The first one is, how does the graph move? How do we change the shape of the graph? What happens when the capital pool increases? What happens when more cover is being purchased? What is a dynamic capital floor, which is something that they have created? Why do we want to increase the MCR ratio? So as Nexus started, they increased the MCR by 1% every single day. And why is that done? And also, why is the improvement proposal that was just approved about 24 hours ago, why did they want to stop this 1% MCR growth? So all these questions are related to the monetary policy or the token policy of NXM. And I want to answer them. So let's start with the graph part, okay? Two things. How does the graph move? And how do you change the shape of the graph? So I've done a little graphing out here. And this is your model. I didn't name them properly, so sorry about that. Basically, the C is correct. The B actually represents A in the model, and A represents the MCR. So what I'm graphing over here, technically the entire model of Nexus Mutual is a 3D graph because we have 3 variables. The first variable is your token price, the second variable is the MCR, and the third variable is total capital pool. Now I'm just going to assume that the MCR is fixed. So we're going to take a snapshot in time right now. Things are fixed. And what happens when the capital pool increases? Because the capital pool is a lot easier to understand, because as a user, to increase the capital pool, I basically put more money into the system. Put more ETH into the system, and then it changes it changes. So I just want to show you a very quick understanding of how it works. How does a change in the capital pool affect the change in prices? So the first question that we want to answer is, how does the graph move? So how do you move along the graph? Let's take a snapshot of the system right now. And now nothing changes, everything is on pause. What can we understand from the graph? So if there is X amount of capital, like the graph line shows that at X amount of capital, what will the token price be? So if the capital increases, then you just find go along the graph line, and you realize that the price of the token of NXM token also increases. That's the idea. So that's how the graph moves. So the way to move the graph is to add more capital in there and increase the token price. Or if you remove capital in there, then you reduce your token price. So how do we do that? You can add more capital, so add more ETH to exchange NXM. So you're paying ETH to buy NXM. And each NXM you purchase is different price. The price is determined by the bonding curve. And basically determine how much it is to buy like 100 NXM token. You basically use the graph and then figure out the area under the curve to determine the price. That's how you get it. And if you want to reduce, or if you want to reduce or go down along the graph, then I will sell my NXM token and I can redeem it for the capital that is the area under the graph as well. So that's how it works. That's how things can move along the line of the graph. The second thing is, how do we change the shape of the graph? So because this is really mapped to the price of token versus capital, and you can see that as I increase my capital, as I increase the capital being put in, then the shape of the graph changes. So as more and more capital is added into the system, then the curve is a lot more gentle, which means the increase in one token being purchased, or the token price of token 1 versus token X plus token X plus and token X plus 1, the change in value is a bit less. So it's a bit more efficient. But if I have very little capital, then the graph is very steep. That means the price difference between token X and token X plus 1 has a more significant difference, so a greater marginal difference. So long story short, more capital, more gentle the curve, which is better for trade or better for pricing, because the price of the next token is not that much different than the price of the previous token. So in general, that's how the shape of the graph changes. Now, let's look at what happens when the capital pool increases. And let's go to the whiteboard. And I'm just going to be writing it out, and I'm going to be talking about it later. So what happens when capital pool increases? So when capital pool increases, the X increases. As we can see that the X increases, the line becomes more gentle, right? And if all things stay the same, this is what it is. So if capital pool increases, then the entire thing of capital pool divided by MCR percentage times the power of 4 increases, and then the entire thing variable increases, the multiplication variable increases, and so the price of token increases. That's the general concept when what happens when the capital pool increases. Now, what happens when more cover is purchased? So, firstly, when more cover is being purchased, your MCR increases, right? Because as more cover is being purchased, the minimum amount of money you need increases. So, because that's the minimum capital required to cover this cover being bought. At the same time, something else increases. When I'm adding money to buy cover, I'm also adding money into the capital, right? The total capital pool also increases. And so now we have two variables. We have MCR increasing, and then we have the total capital pool increasing. And this is important to note, because this part, the ratio of both of them, it's quite important in determining the price of the token. So now we have to see which one increases more. And in general, the total capital pool actually increases more than the minimum capital requirement. And if you just think about it intuitively, the MCR is called the minimum capital requirement. And in general, the minimum capital requirement is much lower than the total capital pool. So that helps you to conceptualize why total capital pool is more than the minimum capital requirement. So similarly, when the cap pool increases by 2 arrows and MCR just increased by 1 arrow, in general the entire variable increases, and so P, the price of token, increases. So what does it mean? It means that as more people purchase insurance, the price of NXM increases. And also, going back to the previous one as well, what happens when capital pool increases? As more people add money into the capital pool of Nexus Mutual, the price of NXM token increases. Why? What is a dynamic capital flow? So I added a dot on the graph at a much lower end, and it's called the dynamic capital flow. As you can imagine, what a capital flow is that it's the minimum amount that is needed. There are two types of minimum amount. One is the MCR, which is the minimum capital required, and the other one is this capital flow, which is the least amount of capital needed in the system. And it's dynamic because it changes based on the different variables that's in there. And this is important because the dynamic capital flow it's lower than the minimum capital requirement. So just in case if things go bad or things go wrong, you have this variable there to allow the advisory board or allow people in the Nexus Mutual ecosystem to understand that, we are reaching very critically low volume. And that could be one of the reasons to create the emergency pause in the system. The next one is, why do we want to increase the MCR ratio? So what is the MCR ratio and why does it need to increase? So currently, the MCR ratio is more than 130%. And this is important because your total capital, so the MCR is the minimum capital required. And so the ratio shows the total capital divided by the MCR. So it's a lot more than the MCR. So that if MCR is where the minimum capital needed to cover these insurance covers. And you want your capital to be above that, so just in case a lot of other bad things go wrong, then you have enough capital to be covering that. So it's 130%. And so previously they were always increasing the MCR ratio, so that by increasing the ratio, it means that you have more capital available to be covering the MCR. And this is, in general, a good thing if you think about it, because remember, we talked about this ratio being the capital efficiency, right? So the MCR ratio shows how efficiently the capital is being used and being deployed. And if the ratio is very high, it means that there's a lot of capital available that is not being used as the reserve. So that means we have a lot of capital available to be used for other things, like other kind of investment, other kind of funding, other ways to get returns on your capital. If the capital is very low, it means that a lot of these capital are being used for your minimum capital requirement, which means being used, they're like stagnant, it's a reserve just in case anything happens to be used to return to the system. And this is good because if the MCR ratio is higher, that means capital can be employed more efficiently and more robustly. Now, let's move on to the last question. Why does the improvement proposal want to stop the 1% MCR growth? So, I didn't talk about it just now, but one of the things that is embedded into the system is that for every 24 hours, the MCR will grow by 1%. So in general, anyway, the MCR will keep growing by 1% every 24 hours. That's the system that they created for Nexus Mutual. And that's good because the MCR is the minimum capital required, and as more covers are being created, then you need to grow your MCR, right? That's good. So every 24 hours, it will grow by 1%. So any capital that's being put in or any capital that's out there, they will keep siphoning out part of it to go into the reserve, just in case there are covers needed. And that's where the capital will come from. And then there's this entire DeFi boom. So in this entire DeFi boom, a lot of people are buying covers. And so what Nexus did was that, okay, so many people are buying covers, we need to increase our MCR so that if anything happens, then there is enough capital to be deployed and returned to be covering the losses of these insurance covers, right? Okay, so what they did instead of every 24 hours they increase by 1%, is that every 4 hours they will increase by 1%. So what does it mean? If we look at the capital efficiency again, we are increasing MCR by 1%, right? It means that our MCR ratio will drop. So previously, I think at one time this MCR ratio was 143%, which is good efficient use of capital, right? There's a lot more capital than the minimum capital requirement to cover the losses. So then you can use this capital efficiently. And what they've done now is to grow the MCR a lot quicker, which means it will reach back to the 130% So to drop that MCR ratio, and because there's more demand in the DeFi ecosystem, which is good. But this improvement proposal says that we should stop the MCR growth. And the answer is quite simple, because if we keep going back down to, the MCR ratio is lower and lower, it means that we're using capital inefficiently. Because a lot of these capital can be used to do other things, as I mentioned, to be funding, to look at different kind of returns in different kind of protocols. But we are just keeping all of them in the reserve instead, just in case something happens. So that's what they want to do. And that's why they want to stop the 1% insane growth for a while, because there's more than enough to cover the existing insurance covers for now. These are various examples of how monetary policy can be changed for the Nexus Mutual token. And it's super exciting and fun, because if you think about it, number one, the policy itself, the monetary policy, the math, includes a lot of different long-term, short-term variables, the capital efficiency or capital allocation efficiency in the system. And it has all these variables into the math. And then at the end of all these different variables, it comes out a price, which is the Nexus Mutual price, to tell you the risk or the value of the system. Good stuff. Then the other thing is that people can just propose changes and other people will vote on it. So this is really what the entire DeFi space is looking to do. It's decentralized, anyone can participate, anyone can vote, and the prices of tokens are not because of speculation outside, but because the market or the ecosystem or this platform is robust, and it creates a lot of value. It aggregates future value and short-term value into it to give out prices. And from there, as a regular user, you don't know how to analyze all these different pricing of different protocols. So you see this token price as a way to understand the long-term potential of these protocols. And that's why I think it's super fascinating. And Nexus Mutual is doing it pretty well.